Larry, happy Monday. Welcome. No numbers today at the bottom of the hour, but a busy week. I was just talking with Stephanie about some of the economic data, but I wanted to get your thoughts on central bank activity first and foremost. Should we expect any changes to come from, well, we've got the Bank of England, the Bank of Japan, and the Fed, the FOMC on Wednesday. Talk to us about what you're looking for.
Yeah, and so on Wednesday, a big day, and I think after that, the market just kind of go to sleep. But right now, there's enough uncertainty in the market with what the Fed will do on Wednesday that some subset of the market's going to be dislocated. But that said, there is one camp that believes that weighted average maturity should be extended. And you could see that in the price action that we've seen like on Friday in a longer end of the curve. But then there's another camp, and I'm in that camp, I suppose, where I think that the extension will not happen right away and keep it into reserve. And instead, the Fed will most likely address forward guidance, but there's definitely a lot to address.
Sure is, and difficult to address is too, I would imagine. I mean, you've got a vaccine rollout, which could be a game changer one way or the other. If it goes smoothly, in theory, we could be back on track sooner than probably the Fed even expected. But ultimately, Larry, I mean, if it doesn't necessarily go as smoothly as expected, and I was just talking about that a minute ago earlier in the show and have been keeping that on the minds of traders because it's not necessarily, out of the realm of possibilities here, but ultimately a difficult, road for the Fed to navigate here in the coming weeks and months.
Yeah, absolutely. And I think the only solace the Fed has right now is that the market itself seems to be very upbeat about the future.
Sure does.
On the other hand, the Fed is cautious about the present. And so with that in view, I think it might make more sense for them to, link the balance sheet to the unemployment rate and to growth rates, update the summary of economic projections. And also, let's keep in mind, like long-term rates are still stuck at 2.5, and yet if you look at the market, yields or Fed funds are only at 10 basis points at 2023. So there's a huge discrepancy and a lot to address. But again, I think the market is really, really optimistic about the future. So it kind of gives the Fed a little bit of a head start on what to do on Wednesday.
Is the yield curve steepening a reflection of all of that?
Yeah, absolutely. And we saw more of a bull flattening on Friday, a little bit of a reversal. But today, yes, we're seeing a steepening, which means the 10-year yield is rising faster than the 2-year yield. So you're getting that expansion. And, in my heart and what I shared on Friday morning is that really no matter what happens on Wednesday, I still believe we'll see steepening into the end of the year.
All right, let's talk about what this all means for a couple products. For example, the dollar into a new low this morning. I'm watching some of the other major currencies, which could potentially be the tail that's wagging the dog, as I like to say. But no matter how you slice it, I mean, if you're talking about the Fed, if you're talking about some of the other central bank activity to come, I mean, ultimately you're talking about the U.S. dollar.
Yeah, exactly. And some, when you look at the pound, of course, is rallying because of the extension again. The euro rallying, but the most attractive currencies to me right now continue to be the Canadian dollar and the Australian dollar, because you see what's going on with the commodities in general. Copper, iron ore up again. Those economies, interest rate sensitive, so they're all doing very, very well. But for the dollar to bounce back and surge to where it was even a few months ago, in my mind, we're going to have like a severe lockdown with the pandemic again, something extended, or we have to have boom times where the Fed will be raising rates and the economy is heating up and everybody's seeking dollars. And, I don't see number two happening, perhaps the former, but not the latter. So we're in this just right mode right now, and that's not good for the dollar in the short term.
Larry, I want to pull up that dollar here real quick and take a look because it has been coming off. This is the daily time frame. And actually, I want to zoom out here for a second and just take a look at where things stand. I've been watching this area, the consolidation from the beginning of 2018 that we saw around this 89, 90 area. As you can see, we're getting into that right now. And again, it looks like if lower this week, it's something like 4 out of the last 5. And Again, certainly something to keep an eye on. 5 out of the last 7, it looks like, to the downside. This dollar has been weakening. You did mention some of the culprits in many ways. You've got the euro currency, which has been inching higher, but this becomes a bit of an issue for them, Larry. Real quick, I wanted to get your thoughts on that because they've been trying to talk it down a bit, and it seems like they've been having troubles doing so. You mentioned the optimism related to Brexit negotiations being extended a little bit further, but the euro currency up and through the 122 handle.
Yeah, it is. On real terms, though, it's still 10% lower than where it was in 2009, but nobody cares about real. We're looking at nominal terms, and it definitely is causing headaches for the ECB.
Yeah.
But right now, as it sits presently, like what is good for the world is not necessarily good for the US dollar, and thus the recipient of that could and has been the euro currency, among others. I mean, I don't think it's going to be a straight line. I still remain a long-term dollar bull. But there's going to be fits and starts, and we're in that right now. And so with interest rate differentials the way they are, it makes sense that the euro currency should rally, but I don't think it's going to be a forever thing.